Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll explore the 10 best stocks to buy now for high returns. So before we start, we kindly ask that you like this video and subscribe to our channel for weekly updates. Let's get started. In today's video, we will look at 10 of the best stocks to buy for high returns. There are several criteria that an investor can use to make an investment decision on the stock market. Broadly speaking, these can be divided into a fundamental-based approach and a technical approach. On the fundamental front, investors analyze a firm's balance sheet, its income statement, and its cash flow statements to see whether there's meat to a firm's evaluation. As a technical investor, on the other hand, looks at share price movements and trends to see whether broader market sentiment can push a stock higher. When analyzing a stock's fundamentals, one of the most common approaches is to look at the price-to-earnings ratio. As the title suggests, the PE ratio divides the firm's share price by its earnings per share. For this purpose, three kinds of EPS can be used. These can be the earnings during the latest fiscal quarter, the trailing 12-month earnings, and forward earnings derived through analysis. The PE ratio is then used to classify a stock as a growth or a value stock. A growth stock is one that has a high PE ratio, which indicates that investors are confident about paying a higher price today relative to the earnings, as they expect that growth will push the earnings higher in the future. Naturally, this makes growth stocks quite attractive since they carry the potential to deliver massive returns. As an illustration, consider the shares of Advanced Micro Devices Incorporated. AMD's PE ratio just a couple of years ago was in the triple digits. This was when the firm had not expanded its chip production, so it was making little money. However, investors were confident that it could grow its market share in the future through successful product design and manufacturing scaling, and valued it accordingly. These expectations materialized in the future, since AMD's stock is up by 474% over the past 5 years. However, while high-growth stocks are attractive and their performance is tightly linked to their fundamentals, a key factor to remember when considering them for an investment decision is the broader stock market climate. Shifts in the economy or the macroeconomic environment have the potential to either hammer growth stocks or push them to new highs. The latter was the case in 2022, as the fundamental dynamics that drove the stock market for the past decade rapidly shifted in the form of rapid interest rate hikes by the Federal Reserve. Higher rates make it difficult for consumers to make pricey technology purchases, raise the stakes for hedge funds to invest in the stock market, and increase the working capital costs of running a business. All three drag down the stock market since they impact corporate performance. With 2023 now coming to a close, this dynamic appears to be shifting. For instance, consider a new report by the Bank of America Corporation, which maps out money flows into equity funds. This report shows that during the 4 trading sessions that ended on November 21, 2023, a net of $16.5 billion flew into the funds. Since October 9, a whopping $40 billion has been piled into equities, which is perhaps the biggest indicator of the changing sentiment around stocks. Additional figures from the London Stock Exchange Group support this information. It reveals that for the week ending on November 20, 2023, U.S. equity funds received $6.27 billion. Sector-wise, it was technology that shone, with $2.29 billion of net inflows during the time period. This is interesting since technology is a high-growth sector with high PE ratios. On the flip side, the relatively stable and value-based utilities and healthcare sectors saw $382 million and $339 million in outflows, lending more credence to the fact that perhaps the era of growth investing is back. There is more optimism in the stock market as well. As of Monday, November 20th, 55% of the S&P 500, which is up by 8% in November, was trading above its 200-day moving average. This is a positive development that indicates that a broader set of stocks are on an upward trend. In technical trading, the 200-day moving average is a crucial resistance point that is often seen as a barrier to longer-term share outperformance. So as the stock market clouds start to clear, we thought to take a look at the best stocks to buy for high returns. Let's review our list. Number 10. Apple Incorporated, ticker AAPL. Apple Incorporated is a consumer electronics and personal computing firm. The firm's flagship smartphone, the iPhone, is facing the heat in China right now, as holiday spending data shows that local firms Huawei and Xiaomi beat Apple's products. As of September 2023, 134 out of the 910 hedge funds in Insider Monkey's database had bought the firm's shares. Apple's largest hedge fund investor is Warren Buffett's Berkshire Hathaway, due to its $154 billion stake. Number 9. Mastercard Incorporated, ticker, MA. Mastercard Incorporated is a technology company that allows consumers and merchants to make and receive payments. These days, the firm is facing the heat in the UK as a government report stressed that Britain needs alternative payment platforms to Mastercard Incorporated. Out of the 910 hedge funds that Insider Monkey profiled, 140 had a stake in Mastercard Incorporated by the third quarter of 2023. Charles Acker's Acker Capital Management owned the biggest stake among these, which was worth $2.3 billion. Number 8. Netflix Incorporated, ticker, NFLX. Netflix Incorporated is one of the world's largest content streaming platforms and one that also produces its own documentaries, shows, and films. The shares are rated buy on average, but the average share price target of $465 is lower than the current share price. During this year's September quarter, 102 out of the 910 hedge funds part of Insider Monkey's research were the firm's shareholders. Netflix's largest hedge fund investor is Ken Fisher's Fisher Asset Management, since it owns 4 million shares worth $1.5 billion. Number 7. Advanced Micro Devices Incorporated, ticker, AMD. Advanced Micro Devices is a semiconductor designer known for its GPUs and CPUs. A key beneficiary of the ongoing AI wave, the firm's shares appreciated in November on the back of its AI products. As this year's third quarter ended, 110 hedge funds among the 910 that were part of Insider Monkey's database had bought and owned Advanced Micro Devices Incorporated shares. Number 6. Microsoft Corporation, ticker, MSFT. Microsoft Corporation is a mega-cap technology giant. It's all drama at the firm these days after its partnership with the world's leading AI software company OpenAI was shaken up due to a surprise move to oust and then bring back OpenAI's CEO, Sam Altman. Number 5. Adobe Incorporated, ticker, ADBE. Adobe Incorporated is a technology company that provides software products for personal and professional use. Not only has the firm beaten analyst EPS estimates in all 4 of its latest quarters, but the stock is also rated strong buy on average with an average share price target of $616.54. Number 4. Amazon.com Incorporated, ticker, AMZN. Amazon.com Incorporated is an electronic commerce retailer. However, this hasn't stopped the firm from expanding into the consumer technology market, and its Amazon Prime Video service started to air NFL games for the first time in November 2023. During this year's September quarter, 286 out of the 910 hedge funds covered by Insider Monkey's research were the firm's investors. Amazon.com Incorporated's largest shareholder is Ken Fisher's Fisher Asset Management, since it owns 41.3 million shares that are worth $5.2 billion. Number 3. Eli Lilly and Company, ticker, LLY. Eli Lilly and Company is one of the largest pharmaceutical companies in the world. The firm's weight loss drug Mounjaro is selling like hotcakes these days, and to keep up with demand, Eli Lilly and Company is spending $2.5 billion to build a new manufacturing facility. By the end of this year's third quarter, 102 out of the 910 hedge funds polled by Insider Monkey had invested in Eli Lilly and Company. Ken Fisher's Fisher Asset Management owned the biggest stake out of these, which was worth $2.3 billion. Number 2. Uber Technologies Incorporated, ticker, UBER. Uber Technologies Incorporated is a ride-sharing company with a software platform. The growth in the global shift online has impressed analysts about its prospects, as the shares are rated strong buy on average with an average share price target of $59.73. Among the 910 hedge funds that Insider Monkey researched, 146 were the company's shareholders as of September 2023. Uber Technologies, the largest hedge fund investor, is Brad Gerstner's Altimeter Capital Management, which owns $613 million worth of shares. Number 1. ServiceNow Incorporated, ticker, NOW. ServiceNow Incorporated is a cloud computing company that is headquartered in Santa Clara, California. The firm made a big announcement in November 2023, which saw it expand its generative artificial intelligence platform for enterprise use. The landscape of the stock market is dynamic, and influenced by both fundamental and technical factors. As we navigated through the top 10 stocks for high returns, it became evident that investors must consider a balance between growth potential and the broader economic climate. The year 2022 witnessed a shift in market dynamics due to rapid interest rate hikes, impacting various sectors differently. Money inflows into equity funds, particularly in the technology sector, indicate a renewed confidence in high-growth investments. The positive performance of the S&P 500, with a significant portion of its components trading above the 200-day moving average, suggests a broader uptrend. Examining the individual stocks, each presents a unique investment opportunity. From technology giants like Apple Incorporated, Mastercard, and Microsoft Corporation to the ever-expanding Amazon.com and the innovative Uber technologies, these companies showcase diverse strengths and potential for growth. The top spot goes to ServiceNow Incorporated, a cloud computing company making waves with its expansion into generative artificial intelligence. As 99 hedge funds invested in ServiceNow Incorporated, with GQG Partners holding the largest stake, valued at $831 million, it reflects the market's confidence in the company's strategic moves. While the path to high returns involves risk and market fluctuations, staying informed about both fundamental and macroeconomic factors remains crucial. As the clouds of uncertainty begin to clear, these carefully selected stocks represent opportunities for investors seeking robust returns in the evolving landscape of the stock market. It's essential for investors to conduct thorough research, stay abreast of market trends, and consider their risk tolerance before making investment decisions in pursuit of financial success. We would like to thank today's video sponsor, Moo, who is giving away up to 16 free stocks when you open a brokerage account. Open a brokerage account using our exclusive link to receive up to 16 complimentary stocks. Act now, as this offer is for a limited time only. Click the link in the description to claim your free stocks today. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.